I'm Lauren Peretti. I am with Housing Innovations, and I am joined this morning by my colleagues Howard Birchman, who's going to be co-presenting with me, and Liz Isaacs. And most of you, we've been doing this with the Connecticut Balance of State Continuum of Care. We've been providing support services to CT BOS for many years. So many of you, we've had lots of opportunities to meet in the past, and it's good to see you all. But for those that we've not had the opportunity to meet yet, nice to meet you on Zoom. We are talking this morning about the fiscal requirements in our COC programs. This is part 2 of a 2-part session. So we did part 1 last week. In case you missed it, it is recorded and posted to our website. We are also recording today's session, and that will be posted as well to our website within the next day or so. So if anyone on your team was not able to make it to either session, have them check out the training page on the website. Just a couple quick housekeeping things. We encourage everybody, if you can this morning, to turn on your cameras. We love to be able to see you, and it's nice for you to all be able to see each other, though we certainly understand if that is not going to work out for you this morning. We are scheduled to be together for an hour this morning, so we're scheduled to end at 11. We will definitely end on time, and we will hopefully have plenty of time to answer all of your questions. If you've got a question that we don't get to, have no worries. Our team is always available to answer whatever questions you have about your COC grants, and our contact information is one of the last slides in the deck. So feel free to reach out to us anytime. And if you want to ask a question, you can put that in chat. You can raise your hand, or please just feel free to unmute and start talking. We are very informal, and we want to make sure that we get to all your questions. So it looks like Liz has put the slides into the chat for us. So if you want to pull down those slides from the chat, you can do that. Thank you, Liz. And we always try to be mindful. I know many of you have been around for a number of years and are familiar with all of the many acronyms we use in the continuum of care work. We will try to be aware that some of you may be newer to the continuum of care and not as familiar, and try not to speak in alphabet soup. But should we lapse into HUD speak and you're not sure what we're talking about, please don't hesitate to ask us to slow down and explain. All right. So this is our agenda for this morning. Last time we were together, we talked about eligible costs on most of the COC budget line items. Today, we're going to talk about costs that are always ineligible. We're also going to talk about HUD has some very specific requirements for if you are billing staff time to your COC grants, which most of you probably are, how that staff time must be documented. We're going to go through what the eligible costs are for the project administration budget line item, and then we're also going to talk about the indirect cost rate and the differences between those two things. We're going to talk about HUD's requirements related to single audits, about how making sure that you neither overexpend nor underexpend your grants. We'll talk about the eLOCCS system, which is HUD's electronic system that you use in order to draw down, get access to your funds in your grant. We're going to talk about prohibitions that HUD has on certain kinds of compensation and gifts. We'll talk about internal controls, and then we'll wrap it up by talking about what the potential sanctions are if HUD were to come out and monitor and find that you did not follow the requirements that we will be talking about this week and that we talked about last week. So the first thing that we want to talk about are impermissible fees. For those of you who attend some of these other sessions that we've done in the past couple months, we've talked about this. I think it was in our housing requirements session. This also came up. But HUD basically says that if you are a recipient of COC funds, meaning you have a grant agreement amendment directly with HUD, or you are a subrecipient of COC funds, meaning you are contracted by the recipient to provide certain services and are listed on the project application as a subrecipient, you may not charge people who are getting services in your projects anything other than their share of the rent or occupancy fee calculated in accordance with the rules that we went through in a previous session, right? So that's it. That's all you can charge people, whatever they owe for their share of the rent, or if it's not a permanent housing program, if it's a transitional housing program, an occupancy fee. So that means that you cannot charge any other thing, right? So you can't charge, for example, any kind of fee for your case management services. If you own a building, right, you cannot charge for air conditioning, extra money for air conditioning, or extra money if someone locks themselves out repeatedly and you have to keep making new keys. You can't charge them legal fees should you have to enter into some sort of eviction proceeding. You can't charge them for security deposits, right? So security deposits are an eligible expense on the rental assistance and leasing budget line item. So you can certainly use COC money, to pay for security deposits. You may not charge participants out of their own pocket for those security deposits. And we talked a little bit about that in the previous session. So when you don't have money available in your COC grant to pay for a security deposit, you want to try tapping other sources that exist in your community for that money rather than charging participants for those deposits. You also can't charge people if they damage the unit. So again, damages are an eligible COC budget line item on the rental assistance, eligible expense on the rental assistance budget line item. So you can pay up to 1 month of damages when someone exits if you've got a rental assistance budget line item, but you can't charge the participant directly. And then finally, you can't have any kind of mandatory savings plan. So you can't say to people, you have to give us, $100 a month and we're going to put it into a savings. You can certainly encourage that kind of thing, but you can't require it. So now all of these things that we're talking about apply only to the organization that is the recipient or the subrecipient of the COC funds, right? Private market landlords, who are neither the recipient or the subrecipient, are going to do all of these things, right? And this doesn't prohibit them from doing these things, but you as the COC funded organization cannot charge any of these impermissible fees. All right, so next slide. There are certain kinds of expenses that are never allowable on a federal award, including but not limited to your COC award. So most of these things I think are pretty common sense and are things you're probably not going to do, right? You're not going to charge HUD for your personal living expenses or any other kind of personal expenses. I'm not going to go through everything here on this slide. There are just a couple things that I wanted to make note of. You can read all of the things here in front of you. So bad debt. So that's basically, a bad debt is basically an amount that someone owes to you that you cannot collect. So for example, if you own a building and tenants owe you rent, or you're leasing a building and tenants owe you rent, and they don't pay their rent, right? And you can't collect that, you can't not bill that amount that you are owed to HUD. So that would be an example of a bad debt. Entertainment costs, right? So this is something you see in the news sometimes. People get in trouble for this, right? For billing the federal government for something that looks and smells a lot like entertainment. So in the COC program, remember we talked about this last time, any kind of activity you want to do with people, right? You've got to be able to demonstrate that how it is necessary to help them to obtain and maintain housing, right? Otherwise, it's not an eligible social services expense. So sometimes people think, oh, community, socializing, these are important things for people. So we're going to take folks out to the movies, or we're going to, go see a show together. And all of that is wonderful stuff to do, right? But unless you can demonstrate how that activity helps somebody to obtain or maintain housing and fits into one of those eligible categories that we went through last time, it's not going to be an eligible expense, right? Because HUD's going to look at it and say that's entertainment. Fines, I think this probably comes up most often. You've got staff who are out there serving people in the community, driving their own personal car or an agency car. Sometimes people might get tickets, parking tickets or otherwise. You cannot bill those fines from those tickets to HUD. Fundraising, right? You can't pay for any of your expenses associated with your, fundraising department at your development department at your agency, things associated with any kind of gala that you might be having, right? None of that is billable to HUD. Interest expenses. So this comes up, unfortunately, not infrequently because HUD, as they were this year, is often very late in announcing the awards from the competition. And so what that means is that some of you may have grants that actually expired before HUD even announced the awards, let alone got around to executing a grant agreement with you. So sometimes agencies may not have enough cash flow to be able to carry those grants. And so they've got to get a loan in order to be able to continue to meet their expenses. Unfortunately, even though HUD has really caused this problem, right, that those interest expenses on that loan are not going to be eligible to be billed to your HUD grant. And then the last thing I just wanted to talk about quickly is taxes, right? So, the agencies, the provider agencies, you are all 501c3s, right? So you're tax exempt. Just remember to bring that tax exempt documentation with you when you make your purchases so that you're not paying for taxes. And should you forget to do that, don't bill those taxes that you may have paid to HUD because that is not an allowable federal cost. All right. HUD also has these rules about what kinds of budget line items can be combined in a single structure or housing unit. So you can't use COC funds, for example, to pay to rehab a building that you do not own and are leasing, right? That's not allowable. You also can't get both leasing funds, right, which you would use to rent the property from the owner of the property, and also funds to acquire a property or construct a new property. And you can't use HUD funds to acquire, rehabilitate, or construct a building that you plan to rent short or medium term to COC participants. HUD requires that once you've accessed those capital dollars, that project has to be used to serve people experiencing homelessness for a minimum of 15 years. You also can't use both the rental assistance budget line item and the leasing budget line item in the same unit, right? Those budget line items are meant to cover the same costs. And so combining the two into on the same unit, HUD would consider that double dipping. And then the same is the case for rental assistance and operation budget line items. So you can't combine those two on the same unit because HUD would consider that also to be double dipping. Now, we do have one joint transitional rapid rehousing project in the COC. And in that project, you can have like an operating and leasing on the TH units, and you can also have rental assistance, but those are only on the rapid rehousing units. So you have to make sure that you keep those budget line items distinct, rental assistance, rapid rehousing, operations leasing, transitional housing. All right. So documenting staff time. So HUD requires backup documentation for staff time that you are billing to a HUD grant. So if you've got an employee that is working just on one project, right, and within that project, just on one budget line item, then all you need is a timesheet. So for example, if you've got a case manager, that case manager works on just one COC project, all their time is spent on that one project, and all of their time is also spent only on eligible supportive services activities, then all you need is a timesheet for that case manager. Unfortunately, that's often not the case in our programs. Some of these grants are very small. It's very hard to have somebody assigned just to one grant. And you've got people who are either working across multiple projects or people who are working across multiple budget line items within the same project. So, for example, if you've got a housing locator, right, and that housing locator is both helping participants to find units, right, that's a supportive services expense. If that housing locator is also doing housing quality standard inspections, HQS inspections, and rent reasonableness determinations, HUD says that those are rental assistance expenses. So now you've got that case manager working on 2 budget line items, and you're going to need some additional backup documentation, not just the timesheet. So, so in some cases, you may have like you're an electronic health record system, and in that electronic health record system, there's a way to say how much time you're spending on different activities, and they're writing what they're doing, right? So if that's the case, you may be able to use that EHR system as, the case notes in that EHR system as the backup. Sometimes, for congregate projects where you've got like maintenance and operations staff, right, there may be some sort of log that you're using to have them record what they're doing throughout the day. That might be usable as the backup system. If you don't have those things, then CT BOS has a sample project activity log that you can use. It's linked here on this slide. It's basically a pretty simple Excel spreadsheet where people write what eligible activity they worked on. So right in this example, you've got the same person that worked on the admin budget line item, the supportive services budget line item, and the rental assistance budget line item with just a little bit of detail and how much time they spent. So, so this is a pain. We understand that this is a pain. Unfortunately, it is the HUD requirement. So one way that you can maybe avoid having to do this would be, if you can, adjust your staffing so that people are only working on one project or one budget line and one budget line item. So in a lot of cases, unfortunately, that's just not going to be feasible. And you want to make sure that where you do that is not feasible, that your activity log and your timesheets reconcile, right? So if your activity log shows that your case manager worked 25 hours this week on the supportive services budget line item, but their timesheet shows that they only worked 10 hours total for the week, right? That's going to be a problem should HUD select those materials when they come in and monitor. So the two things should tell the same story or not be in conflict with one another. All right, any questions before I move us on to talk about administration, project administration, budget line item? Nothing in the chat? All right, so people probably know that projects can use up to 7% of the sum of all the other budget line items to pay for eligible project administrative costs. That 7% is a CT BOS requirement. HUD actually caps it at 10%. And what you can use it for, the eligible expenses for that budget line item are outlined on this slide and the next slide. So you can use it for, general management and oversight of things in your project. You can use it for things like renting, purchasing equipment, paying for your different insurances that you need, utilities and office supplies and rent and maintenance on your office space where you're working. You can use it for today's training, right? Training on continuum of care requirements is an eligible admin expense. As we talked about last time, training on other kinds of important topics like motivational interviewing or housing first are not an eligible expense. So only things that are very specifically related to COC requirements. Environmental review, oddly enough, HUD has decided that's an administrative expense. That is not a rental assistance or leasing expense. It is an eligible administrative expense. And then the cap of 7% we already talked about. So these things are also eligible costs on the admin budget line item. So preparing your program budgets and schedules, developing compliance systems, right? So like, hopefully you're doing some sort of internal chart review, developing, that the system for how you're doing that. Then actually conducting the chart review, any kind of, monitoring, compliance, QA work that you do within your programs, those are eligible admin expenses. If you have subrecipients or contractors, the time you spend doing that contracting work is eligible. The time you spend doing your annual progress report, your APR for HUD, that's eligible. Should you be audited or monitored by either CT BOS or HUD, the time you spend on those activities are eligible. Evaluating your program, right? So the time you spend working on the renewal evaluation stuff that CT BOS requires, those are all eligible activities. Any management or supervision of any of those activities that I just talked about. And then all of your third-party contracts, right? Like, so things like legal contracts, accounting contracts, audit services, those things are eligible on the admin budget line item. So if you are a recipient of COC funds, so you hold the grant agreement directly with HUD, and you have subrecipients that get some portion, you subcontract with, that you get some portion of that award, you must share at least 50% of whatever you've got in the admin budget line item with your subrecipients. So you as the recipient may not hold on to 100% of that admin budget line item. If you have subrecipients, you are required to share at least 50% of it. All right, so even though that admin budget line item is budgeted at 7% of the sum of all of your other budget line items, you cannot simply bill 7% for admin as if it were an indirect cost, right? HUD considers admin to be a direct cost and requires that you bill based on documentation of your actual admin expenses that you incurred. So for example, if you're billing staff time to your admin, right, staff time for doing renewal evaluation, for example, you're gonna need either the timesheet or the personal activity log. You're gonna need a timesheet, and you may also need a personal activity log or some other kind of backup for that time. If you paid an accounting firm for your annual audit, right, and you're going to bill that to admin, then you need, the backup documentation, a paid invoice, something like that, as support for that expense as well. If you are also claiming an indirect rate, which we're going to talk about indirect rates in a moment, you have to make sure that you are not charging the same cost to both admin and indirect, because HUD considers that to be double dipping. And then of course you can only bill to admin the eligible expenses that we just went through on the previous set of slides. All right, so indirect. So HUD makes this distinction between admin and indirect, right? So every agency has the opportunity during each COC competition, there's a place on your project application where you tell HUD that either your agency has a negotiated rate and you are claiming that negotiated rate, which if you've got a negotiated rate, you've got to use that negotiated rate consistently across all of your federal awards. So if you have a negotiated rate, you should be saying that on your project application. Or if you don't have a negotiated indirect rate, then you can tell HUD and must tell HUD if you plan on claiming the 10% de minimis rate, you've got to indicate that on your project application. If you have not indicated that on your project application, then you're not able to claim that de minimis rate. So the competition is coming up soon, so it's your opportunity If you've not already started to do that and you don't have a negotiated rate, please consider claiming that de minimis rate, that 10% de minimis rate on your project application. And the indirect rate is more for things like agency overhead, right? So rather than things like we just talked about under admin that are clearly associated like with your project, right? Evaluation, monitoring, environmental review. Indirect is more things that are overhead costs for your agency that are very hard to precisely allocate to a particular project. So it's things like your human resources functions and your fiscal office staff and your IT department that is really serving a broad function across all of your programs. And the two things are billed differently, right? So admin is a direct cost. It requires backup documentation. Indirect is an indirect cost, and it doesn't require backup documentation, right? So once you have established your negotiated rate, or claimed the de minimis rate and calculated, and Howard's going to explain this all, the modified total direct cost, which is the base on which you apply the 10%. Once you've done that, you can just bill the rate, right? You don't have to have backup documentation for every individual expense. So I think I'm going to turn it over to Howard unless there are questions about what we have covered already. All right.
Well, okay. Good morning, everybody. Happy to be with you this morning while we talk about this fun 10% de minimis rate. Those of you who've been around for a while may wonder where the heck this came from, because this wasn't always in effect. And way back in 2016, the Office of Management and Budget, which oversees the overall federal government procurement and policies, basically reorganized their administrative guidance on all federal awards. Those of you going back for a while may remember that in the old days we talked about A133 audits, we talked about circulars A122, circulars A88. They did away with all those different circulars. They came up with instead this uniform administrative framework under 2 CFR Part 200. That's the regulatory structure for it. And when they established that framework, they also established this new thing back in 2016 called the 10% de minimis rate. What it was a recognition that organizations, especially nonprofit organizations that were administering federal grants, really had a pretty significant burden in terms of administering those grants. And on top of that, that the process for applying for and getting a negotiated indirect cost rate to cover some of those organizational expenses in managing federal grants were really too burdensome for a lot of the organizations that contract with the federal government. So they established this alternative for organizations that have never had a negotiated indirect cost rate. So if you've never applied to a federal agency for an indirect cost rates, you're going to you would have the opportunity to claim this as part of your application. All federal contractors who are nonprofit organizations have the right to claim this 10% de minimis rate if, as this says, in the circumstances they've never had a negotiated indirect rate. If you do claim the 10% de minimis rate, first of all, you're going to always use this hereafter on all federal awards. Now, that means not just the HUD Continuum of Care grant, but if you have other federal grants and those grants permit you to claim indirect costs, not every federal grant does allow you to claim indirect costs, and they'll say in the regulations associated with the grant whether you can or not. But if they're allowed to be claimed under that other federal grant award program, then you must claim them. You must treat all federal grants consistently. So be careful. I mean, don't just unilaterally decide, I want to claim the indirect cost rates on this continuum of care grant, but we'll operate the rest of our agency the way that's always operated. If you make this decision on a single grant, you have to consistently treat all grants the same. So we'd really strongly urge you, if you're not claiming indirect costs, prior to doing this, really have a good meeting with your outside accountant to make sure everybody's on board with how this is going to work. I've seen many times where and this happens in our Connecticut monitoring, where we will read the single audit associated with the agency, and the audit will either say this agency has elected not to claim the 10% de minimis rate, or it'll say the agency has elected to claim it, but that's going to be different from what we see in operations. So you really want to make sure that you're consistent. It'll say in the single audit that they're not claiming indirect, and then we'll look at the grant and the agency is claiming indirect. So you want to make sure that you're consistent. Now, one thing that's really important is the 10% can get confusing, especially because as Lauren had mentioned earlier, administrative costs in the Connecticut balance state are based at 7%. Now, the 10%, and when that 7% is 7% of all the costs in the grant. Okay, so that's pretty simple. When we're talking about the 10% de minimis rate, we're not talking about the total project budget. We're talking about 10% of modified total direct costs in virtually every instance. 10% of modified total direct costs is going to be less than 10% of your entire grant. And hopefully on our next slide, we're going to begin to show you why that is.
Howard, we have a question, and I don't know if you want to wait on it, but it says, what are the pros and cons of choosing this in a renewal application?
Well, the pros and cons of choosing to charge the 10% de minimis indirect rate. Well, there's several. First of all, number one, if you happen to be, and we find this a lot, grants sometimes have trouble spending 100% of the grant amount. A lot of this is because we've got leasing or rental assistance in our budget. It's kind of hard to predict how much our tenants are going to be contributing as their share of the rent. Certainly at the start of the year, it's hard to know exactly what that figure will be. And so over the course of the grant term, sometimes we'll have funds that will be accruing in the rental assistance budget, and basically we will not be able to spend those funds during the course of the contract year. We know that we evaluate agencies to the extent to which they've been able to successfully spend down their grants. So this would be a way in which you could help to spend down the totality of your grant. We're going to go on to explain later. We're going to go on later in this presentation and talk about how you could even use, if you are able to or allowed to claim indirect costs, but because there are not sufficient funds in your grant to be able to actually receive all those indirect costs that you're eligible to receive on that grant. Those are so-called unrecovered indirect costs. And you can also, if you get advance approval from your cognizant agency, HUD in this case, if you have advance approval from HUD, you can actually count that towards your matching fund requirement. So one of the advantages of indirect costs is one, it can produce additional funds for your agency, help you spend down the totality of the grant, and in certain circumstances can help you meet the matching funding requirement as well. So these are all reasons why you might consider adding indirect costs to your budget. Now, I was saying before I stopped there that there are certain, modified total direct costs are never going to, or only in very rare circumstances would they equal to 100% of your budget, because these are all expenses that by the definition of this 10% de minimis must be excluded from your calculation of indirect costs. So any equipment that you purchase cannot be included in, you cannot claim 10% indirect on that. Capital expenditures, we don't use these all that much in the COC program, but that in the old days you could use COC funds for acquisition, rehabilitation, new construction. Every one of those dollars you cannot claim indirect costs on. Or charges for patient care, we're going to have a next slide that's going to tell us a little more about this. But under supportive services, you're probably aware that things like outpatient health services, mental health rehabilitation, substance use treatment services, those things are all eligible as supportive services, but HUD would consider those to be patient care. And so therefore you can't claim that 10% de minimis on those kinds of costs. Tuition reimbursement, we'll talk about a little more about this, but there's some education, job training, tuition costs and things like that are eligible under supportive services, but they would be excluded as well. Same thing, scholarships and fellowships. There are some tuition scholarships in the COC program. Participant support costs, this one's a little more confusing, but HUD has chosen this to interpret that things like in the COC program would be things like under supportive services, you can pay for food. HUD would consider that to be a participant support cost. You can pay for childcare. HUD would consider that to be a participant support cost as well, and therefore is also excluded from the modified total direct costs category. Finally, if you have a subrecipient on your grant, you get the grant directly from HUD and you're contracting with another nonprofit agency to provide services to your participants, the only amount of that subaward, of that subcontract that you're entering into that you can claim indirect costs is the first $25,000. If that contract is for, say, $50,000, you could claim 10% for the first $25,000. Anything else that's remaining in the contract, you can't claim the 10% on. Next slide, please. And these are, again, I went through a lot of these things, but let's go through a little more detail. Now, if you're applying for rental assistance, basically, almost the entirety of the rental assistance budget line is not something you can claim indirect costs on. The only thing that would remain on the rental assist that would be billed on the rental assistance budget line that you could claim indirect costs are the staff time associated with things like housing quality inspections, the staff time that could be associated with determining residents' income, verification of income, things like that. It's only the staff time performing those functions that you claim indirect cost on. You can claim indirect costs on a single penny of the rental assistance, on a single penny of the dollars you spend for leasing, on the utilities that you're reimbursing, on the security deposits. None of those can you claim in it. And as you can see, as I went through before, under supportive services, there are a number of costs that you cannot claim the 10% indirect rate on, but we're not showing all the ones that you can. So case management, for example, assessment of services needs, which is a case management obviously is a big portion of the supportive services budget. All of those case management costs are eligible to claim the 10% de minimis indirect rate on. Next slide, please. So as you know, and I think Lauren pointed this out before, it does get a little confusing. One of the things that's most important if you're going to decide to claim indirect is you really want to identify those costs that you're going to charge to the indirect cost budget line, and you want to make sure that those are only charged to your indirect line and not charged to both direct and indirect. That is a big no-no. That is, as Lauren has said, that'll be a double dip. If HUD finds that, they definitely will ask you to pay those funds back to them. So you really want to segregate those costs that are being charged to the indirect cost line. The feds say time and time again, and Lauren indicated this, the feds don't dictate what are indirect and what are not indirect. They're not going to say in every instance your executive director is always going to be an indirect cost. They're not going to say in every instance your director of information technology is going to be an indirect cost. That becomes a decision that every organization makes on their own. But once you've made that decision, be crystal clear as to what's inside the indirect pool and what's not inside it, and keep those separate at all times. You can, as the slide says, administrative costs, that is the administrative costs that are essentially associated with personnel. Those costs are, you can claim your 10% de minimis indirect rate on those administrative costs. But if you are not claiming those costs as administrative costs, if you're claiming them as under the admin line, as we made clear earlier, you've got to have backup for all of those expenses that you're charging on the admin line. If you're charging it to the indirect line, you don't need to have any backup or documentation. All you need to do is make sure you are not double counting any item. Next slide, please. And I see questions are coming in. Do we want to hit these?
Yeah,
I just was
Okay.
going to let you finish.
Go ahead.
Piece up. So folks are interested in finding out what is the process and timeline for applying for and securing federal indirect costs.
As in not the de minimis, but a negotiated indirect cost rate agreement. Yeah, so that is a much more complicated process. I mean, again, you would want to meet with your outside accountant before you go into that process. You need to get a proposal for them as to what it would cost, because it's a pretty complicated package that they have to prepare for the government. For whatever reason, I'm not entirely sure why this happens, but the Department of Housing and Urban Development has basically farmed out the function of reviewing and approving these costs for negotiated indirect cost rates. They farmed that out to the Department of Health and Human Services. So basically you would first contact HUD, but they would basically refer you over to HHS, who would basically review and ultimately approve that indirect cost rate. It does take time. It's definitely going to cost you money. If you're using the de minimis, basically there isn't, although we did say, and we will say very clearly, you should consult with your accountant before you do it. There's no application that you need to submit. There's nothing that you need. Basically, you just, prior to, in this process, which is what we're saying here on the slide, if you want to claim the 10% de minimis in the continuum of care program, all you need to do is, during the annual application process, which is going to happen sometime in the next few months, when you get to the budget sections in eSNAPs, it's usually the first budget form that you come to, there's going to be a question: do you intend to claim indirect costs on this grant? And if you answer yes to that, well, first of all, you need to answer yes in order to claim indirect costs. But if you also answer yes to that question, like you often have in eSNAPs, it will then open up a couple of other questions that you will also have to answer. As I had mentioned before, and as this little bullet in the middle of this slide says, one of the advantages of claiming indirect costs, even on an existing, one of the challenges of claiming indirect costs on an existing grant is it's not going to increase the total size of your budget. So if you're already fully spending 100% of your grant funds, claiming indirect is not going to produce any additional dollars for your budget because you're already spending it all. However, as we said, if you're entitled to claim, you're saying you want to claim the indirect costs, you're entitled to it. By the way, this calculation of total modified direct costs would say that under your grant, you're eligible for $50,000 in indirect cost under the 10% de minimis rate, but you can't get that $50,000 because you spent all the money in your budget. Then if you, at the start of the process, tell HUD that you would like to use that indirect that you're not able to recover, that you're not able to pay yourself back, you want to apply that towards your match, if they give you permission, that $50,000 can be used towards meeting your match requirement, which can be a very helpful thing. And then finally, this last bullet on the slide, we talked about it is a complex process to have a negotiated rate. But if you've got a negotiated rate, you must use that rate. And in order to, you really must use it. And in order to use that rate, you have to attach a copy of your negotiated indirect cost rate agreement to your HUD application.
Howard, we've got another question.
Yes.
For charging admin direct, it's impossible for us to isolate costs of equipment, insurance, utilities, office supplies, maintenance, audit, et cetera, without using an allocation methodology, such as a grant's headcount as percentage of total headcount for the entire agency or for that location. Is using an allocation methodology for direct admin allowed?
Likely so. I mean, the way you've described it, and your way of computing those costs, and basically, as long as you have some consistent method. I mean, if you're using a head count as the base on which you're going to be distributing that cost is fine. Sometimes people do it on the basis of square footage that are occupied by the program. As long as you have some sort of an outside objective measure, such as the head count or the space that is occupied for it, that would be reasonable to use that as a way to allocate admin costs to this grant. Next slide, please, I think. Okay, well, I think we've talked about this, but this is just going to be, here is the regulation that says that you can use unrecovered direct costs to meet cost sharing or matching requirements. This is where it says 2 CFR 200.306. And here's just the definition of what that unrecovered indirect cost means in federal language. Next slide, please. So basically, I mean, again, we're just putting this slide up to give you an idea, because if you are actually able to claim that 10% indirect cost rate, it means that you're ultimately going to have fewer funds available to spend on direct costs for program participants. So here we've got, several different budget lines that we see in a typical budget. So we've got $50,000 in the case management line. As we said, that's all personnel. It's all personnel doing case management, which can be included in the indirect cost rate. So of that 50,000, all of it is eligible to claim the 10% on, so that it would basically be eligible for $5,000 in indirect costs. But if you're claiming that $5,000 in indirect costs, it means you're only going to have $45,000 remaining on that grant to actually pay for your case managers. On rental assistance, we're not taking anything out, because basically close to 100% of the rental assistance is not eligible for inclusion in that 10% de minimis modified total direct costs. Remember, I did say that the costs of administering the rental assistance, you could claim it, but it's so small, we're not going to talk about it here. If you had, for example, a sub-recipient was a legal services entity that was helping out your participants, and you had a $50,000 subgrant to that entity, 25,000 of it could be claimed, because you can only claim indirect on the first 25,000. So you can claim the indirect on the first 25,000, which would be 2,500 on this case. Similarly, on the administrative staff, there were $15,000 charged to it. It was all personnel. So we're going to take our 10% and be 1,500 there. So we're saying that basically on this $200,000 grant, we found that there was $9,000 in eligible indirect costs that we could claim under this contract, leading to the remaining $191,000 that we could apply to the direct program costs, totaling the $200,000. And that's basically how that calculation works. Next slide, please. Oh, and we have got a poll here. So I'll give Liz a moment to launch this poll, and I will proceed to try and ask these questions. So we're asking, these are basically true or false. One of these statements is not correct. One and only one is not correct. So please find the one that is false. Many costs can be charged as either direct or indirect. Each recipient determines what, if any, costs were billed as indirect. True or false? Recipients claiming the 10% de minimis indirect rate are allowed to claim 10% of their total COC budget as indirect costs. Or, provided that a recipient has established controls to ensure that no cost is billed as both direct and indirect, documentation of expenses is not required for costs billed to indirect. And finally, true or false, to claim indirect costs on a COC grant, a recipient must first inform HUD in the project application. We'll give you all a couple of more minutes to do that. I know indirect costs are annoying and confusing as all get out. So a lot of you are doing good on this. So keep plugging away. Give you a few more moments to complete this. Remember, we're looking for the false statement here. We are looking for which one is not correct. Give it, what do you say? One. Okay, I think we'll end it now so we can, because time is going by. So and are we sharing? Okay, so here are the results. The answer was the incorrect answer here is the false thing is that you can't, the 10 is the second one. Recipients claiming 10% de minimis indirect are allowed to claim 10% of the total. No, they're allowed to claim 10% of the modified total direct costs. Modified total direct costs in almost all instances will be less than the 100% of the project budget. So that was the incorrect answer. There is no need to provide documentation if you're actually claiming it as an indirect cost. And again, it is true. Any cost, many costs can be either direct or indirect. It really is up to your organization's policies to determine how those costs will be treated. Okay, we can be done with that. And okay. Next slide, we're talking about the single audit requirement. Again, back in 2016, when we made this change to this uniform administrative requirements, used to be we talked about the A133 audit. Those have been around for a long time. I've heard this term, A133 audit. They changed it to this single audit. They also keep changing the threshold. I think it started, used to be at 250, it went up to 500. Now it's up to 750,000. So if you've got a total of 750,000 or more in federal funds, you must obtain this single audit. We've had a lot of additional funding that came to us through the in response to the COVID pandemic. It could be that agencies that previously were below $750,000 as a result of all those additional funds and resources that came about through the pandemic might have gone over that threshold. And if you do, you absolutely must get the single audit completed in order to continue to do contracting with the federal government. Although it's a fairly extensive process, it's a very useful process. As part of that process, that auditor is going to be looking at a lot of things, including the so-called internal controls that your agency has over its finances. It's really useful to have that. Those outside auditors hopefully will detect any problems before any federal agency does, and you can resolve them and be in fine shape. So it's a really important safeguard both for you and the federal government. You have to, this is going to be a procurement because auditing services are going to cost some money. So you have to have policies and procedures that you follow in your selection of an audit. On top of that, if there are any findings or concerns that are expressed in that audit, you have to address those. You have to provide a corrective action plan on any findings that are contained in that audit, and you must submit that single audit to the federal agencies that you contract with, and you got to do it within 9 months after the end of that audit period. They give you extra time because they know it is a complicated process to complete these audits, but you have to submit that on time, and you have to do it. It would be a significant finding of non-compliance if you were required to do a single audit and did not complete that process. Next slide, please. Okay, another thing, we've talked about this a little. We talked about in the advantages of using indirect cost. Federal funds are different than other funds. And when you got a federal award, the expectation is that you're going to spend 100% of that federal award on those eligible program activities. One of the ways in which we try to assure that happens is as part of the annual process of reviewing renewal grants, we're going to check how much expenditure has gone on. And if you're under expending, you're going to have fewer points in the renewal evaluation process. We consider active grant management to be the way to go. You just about sign the contract at the beginning of the contract year, and then when the contract is over 12 months later, figure out what happened. You know, on a regular basis, monthly, you should be reconciling or taking a look at what was in the budget, what you've actually expended. Where you find out that you're under expending on budget lines, you should be taking some actions to bring up that spending or make budget modifications to move funds from one budget line to another. Or if you make your best efforts and find that you really have more funds in your contract that you really can reasonably expend to serve the needs of your participants, then you should notify the balance of state continuum of care that you really can reallocate some of the funds from your contract and propose a reallocation, and be proactive in that, and don't have the COC come to you and say you're underspending. Go to the COC and say, you know, there really isn't the right amount of funding in this contract. We'd like to reallocate portions of it so it can be used to assist people experiencing homelessness. Next slide. Okay, you know, the HUD has a lot of great, actually, they're not great. HUD has a lot of electronic data systems that they use in the management of their programs. We know the eSNAPS system, which is how we do their grant management and application process. But we also have the electronic line of credit control system drawdown systems. And so good old eLOCCS. It is, if you're new to HUD contracting, when you first get a HUD award, you're going to have to submit a series of forms in order to access the eLOCCS system. It is both a combination of electronic and paper. There certainly are certain paper forms, or you can scan them and send them in, but you basically, there's certain documents that you have to send to HUD in order to get those to get that access to order the eLOCCS system. It's really important that once you've established an eLOCCS account, you must access that account every 90 days. You don't necessarily, I mean, if you've got a HUD contract, you're expected to draw down funds at least every 90 days. And so you should be drawing down funds every 90 days. But even if for some reason you can't draw down funds in that 90-day period of time, you should still go into the system and just access the system, look at what your balance is in the system. The system really has got this running clock. If you've got an active eLOCCS account and no one has accessed that account for 90 days, boom, your account is going to be locked. And it is a challenging that you have to then go back to HUD in order to get that account unlocked. It shouldn't, but unfortunately, the way things work, it can take time. It can take several days or weeks even, or even longer to get those eLOCCS accounts unlocked. If the account is not unlocked in time, remember, you must draw down all the funds in the grant by 90 days after the contract expiration. 91 days after that contract is expired, those funds are gone. If you've been locked out of the system and can't get back into the system in enough time to draw down those funds are gone. They've gone back to the federal treasury. So keep an eye on it. Especially if you're new to the program, you really want to make sure that somebody is going into the eLOCCS every 90 days to keep your account active. It's a real pain in the tuchus if you lose access to the eSNAPS account. Next slide. So very, very straightforward. This really comes to, I mean, hopefully many of you will serve on a committee or even the governing board of the COC. This is a way in which you help to establish policies. You ensure that the COC is really responding to the needs of people who are experiencing homelessness in the state. However, and this really, all that stuff is really appreciated, but time you're spending on COC committees and things like that, the COC is not going to be compensating you for that. Obviously, if you're working for an agency, your agency probably will continue to pay your salary for it, but the COC itself is not going to compensate you for that service. The big exception for this is for people with lived experience of homelessness. Needless to say, we really value and desperately want their involvement, and therefore we're going to be paying them for their expertise in helping us direct our COC. Needless to say, obviously you cannot receive, especially if you participate in any committees that make any decisions or anything like that on the part of the COC, obviously you cannot accept any compensation or gifts or any promises or anything like that. You can't, clearly that is completely inappropriate to try and get any favor or compensation for any action you take on behalf of the COC. Thank you. So, one of the things we always say is, The reason why we have locks and keys is to basically keep honest people honest. People who are really intent on breaking into a structure are not going to be bothered by the fact that they don't have a key to get in. Honest people are going to say, that's clearly a sign that I ain't supposed to be there. I know I'm not supposed to be there. It's locked. I'm not going to go in there. The same thing, internal controls are really systems that are designed in place that we can make sure that our organizations operate, both with transparency, but assuring that we've got ways to protect so that we never have a situation where a single individual has complete control of the finances so that they can basically write out checks to themselves, write out checks to their brother-in-law, and no one is going to see that happening. We really want to make sure that there's more than one set of eyeballs around. That's sort of the key to all these processes, and make sure in any kind of financial thing, you've got engagement of more than one person, because it really takes a lot to get multiple people to conspire together. Oftentimes, if you've got like a single bookkeeper at an organization, and God forbid that poor person has some sort of crisis in their family or something like that, they desperately need funds. There are funds in that account. They're going to take a small loan for themselves to deal with that crisis. They're going to pay it back immediately. Except they take that loan out. Nobody notices that they took that loan out. Another crisis comes along, and the hole gets deeper and deeper and deeper. Having some controls, having a second set of eyes, prevents that from happening in the first place, and keeps people who really want to be honest from making a mistake and becoming dishonest. So one of the ways among the key internal controls is you really want to make sure you have a clear organizational structure. You've got an organizational chart, so it really shows what the responsibilities are of all the key people in your organization, and you have position descriptions that really show what the qualifications are for each one of those positions, so that, again, if it's somebody in the accounting staff, you can have a position description that says this is the kind of professional experience we want, these are the kind of degrees we want them to have, to make sure that we know that they are capable of doing this work. You want to have really clear policies and procedures that specify how the hiring is, just as I just said, that you're going to be only hiring qualified people for these positions. Separation of duties, things like, for example, when the bank statement comes in on your business's checking account at the end of the month, you don't want the person who wrote the checks to be reconciling the checking account, because that's the way they can say, oh, that check for $5,000 that was altered to be a check for $50,000 was completely legitimate. No, you want somebody else to look at it and say, wait a second, my records show that check was supposed to be for $5,000. I'm getting a check back from the bank for $50,000. What's going on here? That's a mistake. That's how you do it. A secure record keeping system, that would mean, if you've got blank checks and things like that, they're kept in locked filing cabinets. If, for example, you had piles of boxes in a bathroom that had a chandelier on it and things like that, and there were checks in those boxes, you might say that's not a secure system, even if there was a lock on the bathroom door. I don't know, but that might not look like a secure record keeping system where you'd want to keep federal records. And then finally, as I said, you want to regularly reconcile budgets and records, but really use that reconciliation process as a cross-check. So having somebody else do the reconciliation will make sure that we've got a check and balance there. These are the things that you do to have those systems in place. I know we're starting to run late, so next slide, please, and I apologize for running a little late here. So finally, when you're contracting with HUD, you're contracting with the federal government. As we are seeing in real time, there is a lot that they can do when they feel they have been wronged. Obviously, they can suspend payments to your organization. HUD always has the right, if they feel that you have done something wrong, they can basically substitute your agency with another grantee. If, by the way, you're trying to use some matching funds that HUD is not going to accept, they're going to deny that. They can require, if you not showing the match with funds that HUD is going to accept, they will basically say to your organization, pay us back the funds that you have not been able to demonstrate that you could match. If you have spent funds on ineligible purposes, what HUD generally is going to do is ask you to wire transfer those funds back to HUD to reimburse them for those ineligible expenses. They can, of course, terminate the grant. They can basically impose conditions on you on any further federal grants that you can receive. And, in the most extreme possible case where you've not made a simple bookkeeping error, but you've committed outright fraud, where somebody in your organization may have actually taken federal funds and stolen them, used them for completely private purposes. In that case, the federal government would have the right to impose criminal sanctions on that individual as well. There's, basically no end to what they could do if they chose to. And finally, okay, we have one last poll, and then we'll be able to let you give your day back to you people. So each one of these questions is true or false. We can reduce underspending by paying in advance for services from outside contractors. True or false? We have 120 days from the grant end to draw down funds, 120 days to draw down funds from eLOCCS. And C, true or false, if I get locked out of eLOCCS, I will be able to draw down any unspent funds whenever HUD restores my access. So each one of these, we want to know whether it is true or false. Give you a couple of minutes to do it. And thank you, everybody who's participating. Apologies, we're going to wrap this up in just a moment, and we're really sorry that we're a little late. Think we're okay to wrap up this poll? Okay, all right. So here we're going to take a look at what the results were. So we can reduce underspending by paying in advance for services from outside contracts. No, you're not allowed to pay in advance on federal contracts. You really pay federal contracts when the services have been completed. So that is going to be false. Two, true or false, we have 120 days. It was the 120 that was the trick thing. It's 90 days is the correct answer. Why that's the thing, case I don't know, but it's 90 days is definitely the hard and fast end of when you can expend funds on a grant, 90 days after the contract is terminated. If I get locked out of eLOCCS, I'm able to draw down any unspun funds whenever HUD restores my access. No, that's false too. The issue is it's that 90 days again. So if HUD does not restore your access until 95 days after the contract end, you've got a big problem in terms of drawing down those funds. You can't do it. Those funds have been lost. Okay, and I think we're pretty much next slide. I think we're pretty much done.
Yeah, so I think this is our contact information. So if you had a question that we weren't able to get to, I also put my phone number in the chat. So feel free to reach out to Howard or I, and we will get your questions answered. So thank you, everybody. Good to see you.
Goodbye. Have a great one, everybody. Thank you so much.